Okay, good morning. So this video is supposed to somewhat give you an idea of how I set up my daily trade analysis and set up my notebook for the day, right? And I just wrote it in the computer version to visualize it, but this is something I wrote in my notebook every day. And essentially, I'm gonna start the day off writing the time over here, and then things I'm tracking, such as the what the RSI looks like in the 10 minute, what the RSI looks like in the 30 minute, and what the structure is at any of these given times and what the gamma level is. So the structure can be found in the signals channel. And for today, market structure was bullish since 3 a.m. And that is confirmed in this data here. We just want to go back here and look at that. And then these gamma levels can be posted uh, on the trading chat from Bia and stuff. And that's essentially just here. So major positive is the resistance that we're looking at. Major negative is the support that we're looking at. And then from here on, we want to look for BIA's level. So I'm going to do this as we do it. So this way we can see how to pull this data from. So BIA's levels are posted right here, the key levels. And these are major levels. So they're important because if they hit at some point in time today, then we could see a potentially big move from them. We have our daily range, and this tells us how much the market has moved every day for the last 5 days. So yesterday it moved 78, 79 points. The day before that it moved only 44 points. This gives us an idea of how much the market can move, but also keep in mind that one does not mean the other. So just because yesterday it moved 44 points doesn't mean that, the day before yesterday it moved 44 points doesn't mean that yesterday would be max of 44 points. The key here is someone to figure out what the average looks like, when it's getting small, when it's getting big. So we never know when a 90-point move is going to become a 56-point move. And we never know when a 66-point move is going to become a 90-point move. But we can somewhat get an idea of when a 44-point move is not going to be a 44-point move. So if the day before was a 44-point day, we know for sure the next day is most likely not going to be a 44-point day, because this is based on the concept what goes down must go up and what goes up must go down. So this concept applies really well here in the daily range where, as we're going from 62, 66 to 92, we have gone up a lot. It's bound to come down a little bit. So that's why we come back to 56, 44. Now we have gone down a lot and it's bound to go up a bit. So now that yesterday's range was 78, we can expect today's range to be anywhere from 60 to 90. If it hits somewhere around 90, we could be pretty sure that's top, but we can't always guarantee that. But this is a good indication of it. And then now we're going for my levels, which are posted in the trade journal every day, and they work pretty well overnight as well. So this is posted over here, where key levels that we're looking for that will remain bullish or bearish. And this is something we talked about in the trade journal every day. And if you don't understand it, you got to watch the trade journal to get a better understanding of it. It's usually the end of the trade journal videos. So it's not that much time. You just got to skip to that. Then we have our MOB levels. MOB levels are usually on the TraderVate chart, and we're always watching the TraderVate chart from 1 minute, so we always know what the 1 minute MOB is. But if you want to find out the 5 minute, you just need to switch the time frame on the chart, or you can look at the TradingView chart, which also gives you the data. And MOB level is our big level here on our TradingView script algo. So this is very important because this is usually an area where the market usually reacts to very well. Another good point to understand this level is based on how far we are from it. So this is 64.75. We're at 6,500. That means we're 25 points away. Usually, if it gets to 40, 50 points away, that means it's got to come back down. This is a magnet. The key point of this MOB is our make or break level. And this level is a big magnet. It tends to pull the price action to it at some point or another. So one of the two things can happen. Either the price action gets pulled down to it, or this level gets pulled up to the price action. These are two things that will naturally happen. One or the other will happen. But if it needs to be pulled up to the price level, it takes time. If this comes back to it, it's faster. So then the other thing we want to consider is also what the current price is or what market open is. That's something you should be easily able to tell just by looking at the chart. So, current price is 64.90 right now on the chart. You can see here. The market is always going to tell you what the current price is. The other thing you want to know is probably market open price. So put that here. Open price. How do we find out market open price? Easy. We just go to 6 p.m. of yesterday, and that's market open price. So it's also tells you over here too, which is like 22 points from 64.90. So that means it's 64.68. It's around market open. But you can also just drag the time back to 6 p.m. and that will be your market open. So 64.68. That's our market open price. And then the next thing you want to do is how we're going to trade for the day. What is our process? What is our trade setup, right? The trade setup is how much you're going to risk. If you have a C plus setup, then you want to risk one time of, you want to do a small risk. If you have a B plus setup, you want to be 2x this risk. And then if you have an A plus setup, you want to be 3 times your C plus setup risk. So then at this point, for the C plus setups, you want to define your risk here. And this part is going to be very speculative. And this is entirely based on you and your account size, right? So if you usually have a $2,000 account size, then you want to be having the opportunity to be wrong whatever times. So it could be 5 times or 10 times, right? That would be your maximum risk. So if you have $2,000 and you're not that not that great of a trader yet, and you want to have an opportunity to be wrong 10 times before you blow up the account, so then it's 2,000 divided by 10. That means the most you can risk per trade is $200, right? So that means the most you can risk at the A plus setup is $200. Or it could be a C plus setup, actually. It could be like $200, the most you can risk here. But we could change that up and down. It could be $100. So if the most you can risk is $100, then you could probably only trade up to 2 to 4 contracts here. If you're trading 2 to 4 contracts here, so let's do 1 to 4. That's what I usually do, right? If I could only do 1 to 4 contracts here, then over here I would be able to do 4 2 will be 2 to 8 contracts, right? Whatever you define, it could be anywhere from that number. And then from here, it would be 3 times this, right? So it would be 3 to 12 contracts. So if I determine that anytime I see a C plus setup, I'm only going to risk 1 contract, then here I'm going to risk 2 contracts, and then over here I'm going to risk 3 contracts. If I determine that for C plus setup, I'm going to risk 4 contracts, then that means for B plus setup, I need to risk 8 contracts, and then for A plus setup, I'm risking 12 contracts. So that all depends on how much you define you're going to risk for the C plus setup. As of right now, C plus setup, I'm usually risking 1 to 3, depending on the day as well. But let's say I'm mostly going to risk 3 here, and I'm trading with a 2,500 balance. So if I'm risking 3 here, then over here I'm risking 6 contracts, and over here I'm risking 9 contracts. This is my normal risk tolerance. This is what I'm really comfortable with, and this works good for me. So that's how it would be based on that. And then where would you find what the setups are? That data is here, right? So you go to the education channel. A lot of stuff are in the education channel. And this is something that I think is really annoying to do, but it's a good process to define and to refresh yourself. So there's things like, you know, bullish foundation candles. There's also things like the setup here. So an A plus setup would be where if you get a 10-minute buy signal, a 48-minute buy signal, and and you get a bounce off crucial support resistance or structure, right? So it can also be a triple signal plus in the same direction as a bullish structure signal. So let's say we have a bullish structure signal and we have a triple buy signal. That's a A plus setup. You want to risk as much as you can there because it's probably going to be right and you're going to make a lot of money and you're going to be able to call it a day. It could also be a triple signal. Plus, we just hit a major support level, which is one of Bia's levels, one of my levels, or one of the MOB levels. That would be a major level, right? If we hit that level and then a few minutes later we get a triple buy signal, that's a strong confirmation. That means the level held and we have a lot of buyers coming in, right? Another thing is if we have a bullish structure signal plus any of the X1 or X3 signals that aligns with it, and that's a A plus setup, and rarely does that happen. And also, if we hold one of the major gamma levels, that would be also somewhat the same thing as having a major support resistance level. And the B plus setup is just a triple signal by itself. So if we get a buy signal on ES, buy signal on NQ, and a buy signal on YM, that's a triple signal. So it could be a triple sell signal too. That itself is a B plus setup. Those are usually pretty effective. It usually means there's so much of selling volume or so much buying volume that all of the indexes are flowing in the same direction. And if that's the case, that simply means the market makers are choosing to move in that direction. That's why there's so much volume. That's why so much push in that way. So that itself is a B plus setup. Another B plus setup is if we are already in the bullish structure and then we get a buy signal, right? And that means that we have two alignments there. That's two confirmation. That's a B plus setup. Or if we get an X3 signal, that's also aligned with the bullish structure. That's also a similar setup. Um, Buying a support resistance following signal. So let's say we have one of the resistance or one of the supports. Let's say for today's argument's sake, um, example, I believe 64.91 is a major support right here, right? That's a support level here. And if we get a buy signal at any given time right now, that's two confirmations. That's a B plus setup right there. So, and then we have C plus setups. C plus setup are just if we hit any of these major levels. So C plus setups are if we are just heading any of these supports and we want to buy here. So let's say 64.92. That's one of the support lines here. That's a bounce. That's a C plus setup. If we hit the MOB, that's a major support. No signals, no bullish confirmation. We expect it to move. So that's gonna be a C plus setup. So let's say if market structure is bearish right now, right? We get a bearish market structure and the market comes all the way down and it hits the MOB. We're still expecting the MOB to do a tiny bit bounce. So we're going to click buy despite it being a bearish market structure, right? So we're going against the market structure at this point, but we're expecting a major level to have some reaction. That's a C plus setup. It's a low risk play. We're only going to play small contracts. If we make money, we make money. If we don't make money, oh wells, right? Um, and then another C plus setup would be if we making the play of directional volume plays. So let's say over here we know that we are in a bullish market structure. Today we are in bullish market structure. As of this whole time frame right now, we're still in bullish structure, which means we should be buying the dip. But we saw a major volume move here. We saw a doji here in the 1 minute time frame, and then we saw it follow up by a drop heavy candle, right? So what does that mean? that means we see a possible opportunity for a candle reversal. That's a C plus setup. That means, the volume is heavy of selling, which means it could change direction because we just had a whole day of going up. So we're not going to risk big here. We're going to make a small risk, trading one contracts. And this will play out. But sometimes it doesn't. Sometimes it could be like this, where it's a doji, and then you think there's selling volume, and then selling volume does not happen, and they just keep going up. That's why you want to risk much lower than you would risk here, or any of the other setup. So I hope that gives you guys a good understanding of the setups, the, the process, and everything that you need to read to get ready for the day. Uh, Longer video than I want it to be. But good luck, and jog the process down, write it out, whatever works for you, and make money. Thank you for watching.